Hi, I'm Kathy. Today, I'm going to be exploring 9 effective ways to enhance your credit score. If you're looking to build a solid financial foundation, managing your credit wisely is key. Let's dive into these actionable items so that you can positively impact your credit profile. And then stick around at the end to see if you can answer 3 questions about boosting your credit score. The first tip I have is pay your credit card balances strategically. One way is to focus on high-interest credit cards so that you can aim to reduce outstanding balances. To do this, you're going to need to gather all your credit card statements and find the interest that you're paying on them each month. Here's a sample of what that looks like. Then you're going to put them in order of the highest interest first, then the next highest, and so on until you get to the lowest interest rate that you owe. This might look like 22%, 21%, and 18%. Now, this might look like this first credit card you have a $600 balance on with 24% interest. The second one, you have a $1,000 balance at 26% interest. And the third one, you have a balance of $1,200 with 19% interest being paid on it. Let's say the minimum payments are $60 on your credit card number 3, $50 on credit card number 2, and $40 on credit card number 1. With the avalanche method, you're going to want to pay off this highest interest first. So maybe you add an additional $50 every month towards this card. What you're going to do is pay off card number 2 until it's completely paid off. Then you're going to go to the next highest interest, pay off card number 1 until it's paid off, and then pay off card number 3. And you're going to do that by taking this $100 and then applying it over here to pay $140 each month. And then here, when you're done paying off credit card number 1, you're going to take that $140 and pay $200 to pay off this last interest credit card. That's the avalanche method, and you can picture it as you're paying off each credit card based on the highest interest rate. Conversely, you can pay the snowball method, which is where you actually pay off the lowest amount first, which in this case would be card number 1. Then you pay off card number 2, which has the second highest balance. And finally, you pay off card number 3, which has the largest balance on it. So the benefit of this snowball method is that it helps you get rid of your debt more quickly if you need to see a card disappear more quickly. In the avalanche method, you're actually paying off the higher interest rate, which will save you more money in the long run. There is no right or wrong way, whichever way is going to be most motivating to you. Finally, if you can be very strategic and your credit score is high enough, zero balance transfer. And this means you're allowed to roll over your high interest loans into a zero interest loan for a set period of time. It is going to require that you are so careful and able to pay off the loan before you get a new, usually high interest rate starting on that loan. It is a great option if you have the money to pay off the loan before the date that the new rate begins. And in reality, you can do both zero balance and one of the other methods if you're able to manage it. Because these strategies will not only help lower your credit utilization score, but also demonstrates responsible credit management. Number 2 is increasing your credit limits can improve your credit utilization ratio and positively affect your credit score. Approach your credit card issuer and make a compelling case for a higher limit based on your responsible credit usage. If you're experiencing one of these, say you've recently gotten a raise, because increasing your income means you'll have more money to cover an increased credit card expense if you have to charge more at some point. And this is one reason that they'll ask you to update your salary whenever you're on their website or call in. Another reason is if your credit's good. A good credit score signals to your credit card issuer that you're responsible with borrowed money, meaning that you're more likely to make payments on time and be able to understand how much you can afford to charge each month. The higher the amount of credit that's available to you, that's unused, the better at calculating your risk gets. And finally, if you have a good track record. If you've made all of your payments on time and never maxed out your card, you're likely to get approved for a limit increase. And you're also better positioned if you've had this account for more than 6 months with that particular company that you're asking for that credit limit increase. The third tip is becoming an authorized user on someone else's card. Piggybacking on someone else's positive credit history can give your score a boost. Ask a trusted friend or family member if you can become an authorized user on their credit card account, and that's going to help you establish or improve your credit history. As an authorized user, you'll be the secondary account holder on this credit card. As a secondary credit card holder, you can make purchases, but you aren't usually ultimately responsible for a payment, unlike a joint account holder or a cosigner would be. An authorized user may receive his or her own credit card and account number, but the primary card holder can view all of the purchases and make the payments. You may decide to reimburse the main card holder for any balance that you put on the card, or not use the card at all, because you'll still be able to take advantage of the account's age and positive payment history if your name's on the account. However, if you're thinking of doing this for someone else and the card holder is unreliable or makes late payments, that's going to be reflected on your credit score. So be sure and choose wisely before letting someone boost this way or asking for this boost. The fourth tip is to pay your bills on time. There's now an option where you can boost your credit score with your utility or rent bills, and although it's not reported to the agencies, you can allow them to see your bank account and track these payments to add points to your score. But of course, timely bill payments are crucial for being able to boost yourself into a healthy credit score. If you don't pay on time, you could set up reminders or automate your payments to ensure that you never miss your due date, because consistent on-time payments reflect positively in your credit report. Otherwise, it just becomes another ding against your score. The fifth tip, dispute any credit report errors. Regularly review your credit report for inaccuracies. If you spot those errors, dispute them promptly, because correcting mistakes can prevent any negative impact on your credit score. You might find something marked late and it wasn't, or an address is incorrect, or the places of work that they have listed are actually no longer your employer. Making sure that everything is correct will represent you truthfully to lenders or employers, because they're sure to review your credit worthiness. Number 6, deal with collect accounts. If you have any collection accounts, address them strategically. You can negotiate settlements or use payment plans to resolve these issues and minimize their impact on your credit score over time. Because a collection debt won't remove the negative mark from your credit report. But if you pay an account that went to collections in full, it will show on your credit report as paid, even though it will still show up as a debt that went into collection. In fact, you should expect it to remain on your report for up to 7 years. NerdWallet says that the only exception to that 7-year rule is medical collections, that all paid collections are removed from credit reports, leaving you only the unpaid medical collections that are over $500. Number 7's tip is to use a secured credit card. Consider getting one of these secured credit cards if you're trying to build your credit. These secured cards require a cash deposit that you're actually using as collateral to show that you can pay the balance when it comes due every month. But they can be an effective tool to demonstrate responsibility with your credit usage as you keep up with your payments and show your credit report that you're paying it in full each time, building that credit worthiness. Be careful though, because these cards usually offer high interest rates and low credit limits, but as long as you keep up with your payments, it's a good credit building option to consider. Number 8's tip is to get credit for your rent and utility payments. As I mentioned before, credit bureaus may consider rent and utility as part of improving your credit score. So explore services that report these payments to your credit agencies, and that will allow you to build credit through your regular monthly expenses. Experian states that your payment history is the most important factor in your credit score. So the more on-time payments, that's going to give you a lift. Experian Boost only adds on-time payments to your credit report, so late payments are not affecting your score if you're making them. And the final tip is to add to your credit mix. Having a diverse credit mix, including credit cards and loans and other forms of credit, can positively influence your credit score. These are revolving and installment loans that I discussed in detail in this video. So listen in for more specifics. Make it a goal to have a balanced mix while maintaining responsible usage, because having a mix and not paying on time is not a benefit. By incorporating these strategies into your financial routine, you can take proactive steps to improve your credit score. Remember, building good credit is a gradual process, just like getting bad credit was. So be patient and stay committed to your financial goals. Now, can you answer these 3 questions? Does adding your name to someone else's card help your credit? What are the snowball and avalanche methods of paying your debt? And does having different types of debt help your score? I'm Kathy. Thanks for joining me while you embrace the power of financial literacy so you can make informed decisions that will enhance your creditworthiness and overall financial well-being. If you've already subscribed, thank you. And if you're new here, please hit the subscribe button and then click on the alert button so that you can change your relationship with money.